Hey there, I'm Rob Heflin, Senior Mortgage Loan Officer with NMB, and today I'm chatting with Brent Phillips, our branch manager and Senior Mortgage Loan Advisor who's been in the business for how many years, Brent?
About 23 or 24 years now, Rob.
Long time. I bet you've seen it all.
I sure have. And yes, it is a long time. Been through a lot. It's a cyclical industry, and I've been through a lot of crazy markets.
Absolutely. So, Brent, with new home purchases, it's definitely a different market now than it was, say, 24 or 36 months ago. People are still wanting to buy, but with higher rates, it's making people really hesitant. Should they buy now or gamble on rates going down?
Yes, they should by now, and here is why. It is definitely a crazy time. It's a very volatile market. The lending environment is extremely volatile as well, meaning rates are all over the board, as well as approvals. Like they tighten up the reins when it gets a little bit more risky to lend, right? Someone who may have been approved a year ago might not be approved now if they're on the fence. So there's a lot of reasons to buy now versus waiting, which seems kind of counterintuitive because they want, people want lower rates and lower payments, right? Here's the thing though. 2020, the rates were so low, and that's what a lot of people are waiting for. And they've said, I'm going to wait, I'm going to sign another lease, or I'm just not going to sell and upgrade my home until rates come back down into the threes or fours or whatever their dream is. And I get that. However, the rates were artificially reduced during COVID, due to COVID, to stir the economy. And that's a topic for a whole nother day. But anyway, what happened is they had to come back up at some point, and they've gone up. And of course, prices went through the roof. Now, here's the thing. The prices are going to keep going up on houses, barring a housing crash, right? And if that happens, we have a lot bigger things to worry about. But we are going to see prices continue to increase. The rate of increase has actually slowed down a little bit. I know there's certain markets that are kind of stabled out or even going down due to other external circumstances like Florida with hurricanes and things like that and insurance costs. Those are anomalies, just like the rates in 2020 were anomalies. Overall, though, we know that the price of homes are going to keep going up and that the industry predicts rates are going to continue to decrease. There is a ton of pent-up demand. It's a tsunami of demand waiting for the floodgates to open. Once rates drop to where people feel like it's significant enough, they're going to flood the market, and you're going to be back into the 2021 multiple offers, 50,000, 100. We were seeing over $100,000 over ask. And if the house doesn't appraise for enough, you have to pay that out of pocket from liquid assets on top of your required down payment and closing costs. So you have to have a lot of money in the bank, and that disqualified a lot of people, a lot of first-time home buyers who don't have an extra 50 grand laying around to pay over the price of a house, and it was all just craziness. We're going to see the prices continue to increase. Rates are going to overall hopefully continue to decrease. Now, when the Feds announced they weren't going to reduce the Fed rate and then pass the foreign aid bills, that had some adverse effects, and rates kind of jumped significantly overnight. But we still believe rates will tend to go down. Having said that, when the floodgates of that demand open back up, it's going to be the house you can get, not the house that you want. I've had people who've made 16 offers before getting into contract. Imagine the number of houses they're looking at, and is it their first pick? Absolutely not. Right now, we have low inventory. However, rates are still a little bit higher, but they're still reasonable historically. So my suggestion would be strategically to jump in now, buy the house you can afford and that you want. You still might have some multiple offers, but you might have 5 offers instead of 50. Big difference. I would suggest doing it now and make sure it's affordable. And then you can only get into a better financial situation from there, because if you can afford it now with a little bit higher rates, which are kind of more normal, give or take, historically, then you could refinance it if rates do come down and when they come down, and then your payment's that much more affordable. And this whole time, you were in a house that you liked more, and you're building equity wealth that you can roll over and put down on the next house when you do decide to upgrade. So I think strategically now is the time to buy, because I think if you're waiting for those rates to get back down into the threes and fours, it's probably a pipe dream, and houses are just going to continue to increase in price. So it's kind of negating the benefit of that almost. I mean, but you're not going to find the house you want when that happens, if you can even get it. So many people just bailed out of the market when that was going on. So I would say for now, I would absolutely do it now.
Gotcha. Yeah, that makes a lot of sense. And thanks for explaining that. Words of wisdom, as always. Good chatting with you. Catch you next time, buddy.
All right, thanks, Rob. We'll see you, bud.
See ya.